Let's talk about the African Guarantee Fund for small and medium-sized enterprises. It's been issued with an insurance financial strength rating of AA- by Fitch. This is the first time a guarantee fund in Africa has been assigned this status. It's the second Africa-based financial institution, in fact, to get that rating. This was attributed to a range of factors, a strong business model and its operational strategy as well. But let's dig deeper beyond that rating and into its business model as well. Jules Gankham is the Deputy CEO of the African Guarantee Fund, is live in studio with me tonight. Thank you for your time.
Thank you for having me.
So, walk us through your business model. If an SME is watching this and they say, okay, I'm interested in what AGF does, and they come to you or they come to one of your partner institutions, what happens next?
Thank you for your question. So first of all, we don't deal directly with the SME. We deal mainly with the financial institutions. So in case an SME, they want to have a kind of access to finance, what we'll do is to direct them to the financial institution that we are dealing with in different countries in Africa. You know, what we do provide are the guarantees. If an SME has a bad business model, the guarantee will not make it good. So what we do mainly is to direct the SME to the banks so that the banks can do their own assessment. Once now the bank, they are comfortable with the assessment on the SME and they want to issue a loan to an SME, but the main thing that is lacking is collateral. This is when we comes in. You know, because today in Africa, most of the banks, to be able to issue loan to the SME, in terms of collateral requirement, is quite tough in Africa.
Yeah.
So what we want to do is to give a collateral on behalf of the SME. That's what we call the guarantee.
Right. There's something else that usually comes up every time we talk about SMEs. Oh, they're very risky to lend to, because that's the feedback you always get from banks. It's a very risky place to put capital in. It's expensive to do all this due diligence. But I'm looking at your portfolio based on your annual report by the end of last year. Your non-performing loans are pretty low, just 2%. How did you achieve that? That
is a very good question. You know, there is always in Africa a big gap between the perceived risk and the real risk. And when it comes to the SME, this gap is even wider. And if you are SME, and on top of that, you are African, the gap is even wider.
It's a double whammy effect.
It's double effect. So today, you see, you mentioned the 2%. People will we sometimes talk about a statistic where they will say 50% of the SME die during their first year. But those 50% of SME, why are they dying? The main reason is because they don't have access to finance. So now, if you take the one that were able to have access to finance to support their activity, to support their growth, you will see in that portion, the default rate is very low. And also there is another perception factor, is the formal sector and the informal sector. People tend to put all of them in the same basket. You know, the informal sector, yes, is very risky because they don't do their bookkeeping, the way they manage their accounts is not done properly. But now when you go to the SME that are registered, that do their bookkeeping properly, you will see there the default rate is very low.
Right. Something else is pretty interesting here. So you've got this credit rating now, AA-, which is fairly good. You do need to raise quite a bit of capital between now and 2020. So how then does this rating affect the cost of capital that you intend to raise? Because as I understand it, a big chunk of that is just going to be debt.
Definitely. Yeah, so our credit rating will boost our capital raising that we are conducting at the moment. Today in the pipeline, we have $120 million that we are looking to raise in 2018. So what this rating is telling is that we have a proven business model. We are the company that all the international investors should partner with if they want to invest into Africa. And what it also tells is that we have today a team of bright people, of people that have this kind of expertise, and it's cross-cultural. But more importantly, it's not mainly about the capital that we are going to raise, because if we raise this capital, we have to use it, we have to leverage on it.
Yeah.
The most important part is mainly on our customer, which are the banks. What we want to tell to the banks is that today we have the capacity to mitigate their risk, because the guarantee, we are providing that to the bank. And the bank, they need to make sure that as you are guaranteeing my portfolio, you have the capacity to mitigate the risk I'm taking on the SME. So what we want to tell to the bank is that today, yes, we have this capacity. Today, our guarantee is much better than any type of collateral you will require from an SME.
All right, so let's wrap up with this. Some people might be watching this and saying, okay, I know between now and 2020, AGF needs to raise about 420 odd million or so dollars in terms of capital that you want to add on, and about 80% of that will be mezzanine or convertible debt. So where do HNIs, high net worth individuals and institutions from the private sector, fit into that fundraising model? Because right now your shareholders are mostly the African Development Bank and DFIs from France, from Spain, from Denmark.
Yeah. The private investors, they are very welcome to join us. The only condition is that we want investors that are impact-minded investors, because our target is not just to make profit. Our target, yeah, we have to make profit to be sustainable, but one of our ultimate goal is development, is sustainable development. We want to develop economy in Africa. So at the end of the day, the way we want to be appraised is not just in terms of money we were able to make, but in terms of job we were able to create, in terms of women that were able to have access to finance. So we are welcoming all the private investors as long as they are impact-minded.
All right, then. I should also point out, of course, that you were profitable last year to the tune of, what, $3.7 million?
Definitely, yeah.
All right, we'll leave it there for the time being. Jules Kankam, thank you very much for your time.
Thank you very much.